Okay, so this is actually going to go fairly rapidly. You know who this is, Larry Summers? He says, secular stagnation, everything bad. Really smart economist, really good guy, everything bad. This is what secular stagnation is. Low or no growth, weak inflation, low interest rates, chronic shortfall in demand. Stagnation. Okay. And Bernanke says Larry Summers is an idiot. It's not all those things. It's not stagnation. He calls it a combination of cyclical and special factors. So smart guy, everything is bad. Another smart guy, it's not so bad. Okay. Here's the IMF in a report saying, 2015 is looking pretty good. Here's the IMF saying, but once we get out past 2017, everything's going to fall apart. And by the way, every time they do the report, they're saying they do the report for the immediate, future, and they say this is going to be, this is worse than we expected. And then they downgrade and they downgrade and they downgrade. But now they're saying it's going to be okay now, bad in the future. Okay. So here's a guy, Ken Fisher. He's one of my least favorite advisors on the planet. He manages, $300 billion. It's insane that he has clients. He is one of the most bullish people always and consistently ever. And so he's very bullish. But then there's this guy who's very smart, another smart guy, invests a lot of money, controls a lot of things. And he's quoting some of the smartest people in the world, Stanley Druckenmiller, George Soros, Ray Dalio, Jeremy Grantham. You know who that is, right? That's Bill Gross. He's saying the 35-year thing that started in 1980, 1981, 82 is over. The cycle is over. We cannot possibly have those kinds of gains ever again until we right-size our bond market or bring the rates back up to normal. Okay? So here's people saying the average is, this is BlackRock, looking at the last 4 times we raised rates, saying, 1994, one quarter was bad, second quarter was bad. After that, it was pretty good. And then 99, 2004, the average over the last, it goes down the first quarter, next quarter is okay, next quarter is good. So this, rising rates shouldn't be too bad. Or this time is different, and because, this is Société Générale, French bank, this is the 3rd time in history when stocks have done what they've done in the last 6 years. The last 2 times, 1929, 1999, right? So there's reasons to be like, well, I don't know, right? So what is this? Forecasting sucks. No one knows what they're talking about. There's all kinds of people out there saying stuff. And this is OXY Advisory Group did a study. And the study said, they looked at 2012, and 46% of the pundits on CNBC were right. 54% of the calls were wrong. That's worse than a coin flip. So you don't, what it is people just, they're throwing stuff out there. Maybe they'll get it right, maybe they won't. Everyone, it's a guess. It's just a total, not even an educated guess. It's a guess. Okay. So there's always going to be opportunities. There's always going to be things to be afraid of. All of this stuff that's happening, there's a natural progress in markets, right, and economies. Things grow roughly at an average rate of 2, 3, 4% per year. Economies grow. Companies add leverage and they sell new widgets and they go into new markets and their earnings grow between 6 and 8%. Sometimes there's massive drawdowns and difficulties. We manage across broad ranges of asset classes because we cannot predict. We do not know what's going to happen next. No one does. There's no shame in this. No one has any clue. We have a sense from time to time that some big thing is going to happen and it's going to be negative. That big thing is the bond market right now. When people are really excited or afraid of something, usually you can take the other side of that. Like being afraid of China, could China completely implode? No. I can't come up with an economic scenario where they quit, buying toothpaste. I can't come up with that. It's unlikely.